Good morning, it's Alex with your Main Street briefing for Thursday, July 23rd. Today, new tax breaks are already in owners' pockets. A swipe fee fight could cut your card costs, and an SBA rule change is reshaping life for federal contractors. 3 stories, 5 minutes, done. First, taxes. The working families tax cuts signed last July are now shaping this year's filings, and the Treasury says they've already lowered taxes for more than 12 million small business owners by roughly $7,000 each. The provisions that matter most on Main Street, tips and overtime, are now effectively tax-free for eligible workers, which changes how you talk to hourly staff about take-home pay. Bonus depreciation is back, letting you write off qualifying equipment faster instead of stretching it over years. And there's updated guidance on worker classification. That last one is a compliance trap as much as a break, because misclassifying a contractor is exactly the kind of thing that surfaces in an audit. The equipment piece is the one with the clock on it, since the biggest deduction goes to purchases you actually place in service this year. Sitting on the decision is the same as leaving money on the table. What to watch? Ask your accountant this month whether you can pull a planned equipment purchase into 2026 to capture full bonus depreciation rather than spreading that deduction thin across future returns. Second, card fees. The Credit Card Competition Act, which the president endorsed earlier this year, would require banks with $100 billion or more in assets to let credit card transactions route over at least 2 unaffiliated networks. The Merchants Payments Coalition estimates that competition could save merchants and consumers more than $17 billion a year. Here's the backdrop that makes it real for you. Processing costs average around 2.35% per transaction. Swipe fees cost businesses nearly $150 billion in 2024, and about 35% of small businesses have already started surcharging customers just to offset them. For most owners, card processing is a silent top 3 expense that never gets renegotiated because it's buried in a statement nobody reads closely. Even a small rate cut compounds across every sale you make all year. What to watch? Pull last month's merchant statement. Find your effective processing rate by dividing total fees by total card sales, and if it's above 2.5%, get one competing quote from another processor this week. Third, federal contracting. The SBA's recertification rule changes took effect this year, and they hit small businesses on federal multiple award contracts the hardest. Under the new rules, a merger or an acquisition can trigger the loss of your small business status in the middle of a contract, which changes both your compliance calendar and the entire math on any sale of your company. If you sell to the government or you're quietly eyeing an exit, the timing of a deal now carries contract consequences. It simply didn't before. And getting it wrong can cost you the very awards that make your business attractive to a buyer. This is one area where guessing is genuinely expensive, and the person who knows the answer works for the agency you already contract with. What to watch? If you hold federal contracts, ask your contracting officer directly how the recertification change affects your current awards before your next option year comes up for renewal. That's your Main Street briefing for Thursday. I'm Alex, back tomorrow with 3 more. Go run your day.